Mr. Permell, welcome to the Business Corner. I know the last time you were here, you talked about some positive movements with regards to CLICO and payments to policyholders. So, if you could give us an update.
In terms of the CLICO matter, really, there has been no real movement in terms of the issue, except as I mentioned on the last occasion, there was a significant number of assets that were transferred from the CLICO Investment Bank to the government as a result of the entire CLICO resolution of the CLICO bailout situation. So that is really what has taken place. And the NIF is as a result of that, because what has happened is that the government has taken these assets from the CLICO situation and they've placed them into a fund. And what they're trying to do is, well, I don't want to use the word monetize those assets, because monetize suggests that the assets are going to be sold. What the government is doing is they're trying to raise funds to balance their budget as a result of those assets. So the assets are going to be used as collateral. So what they're really doing is collateralizing the assets by placing them into a fund, and then they are going to borrow money against that fund by virtue of this company called the National Investment Fund Holding Company Limited. And that is the context in which the National Investment Fund has come about. Now, what that has done, it has created an investment opportunity for the average man, the regular guy on the street. And while I heard the minister a little while ago saying that it's really a gift to the nation, I don't necessarily agree with that being the original intention of the NIF. I mean, and I'm not going to deal with the political side of it. I'm going to just share with you my understanding of what has transpired. So the government is trying to raise funds. They have placed these assets into this NIF, and the NIF is going to borrow money by way of a bond, because that's what a bond is. It's borrowing from the public. Now, this bond, there are different types of bonds, of course, which I can't get into all the details of that. But this particular bond is known as an asset-backed bond. It's a bond that is backed by certain assets, as the minister identified. You have Republic Bank shares, you have Angostura shares, you have Trinidad Generation Unlimited shares, you have Whitco shares, and you have One Caribbean Media shares. And those shares are going to support that bond. Now, what is important for the public to understand is that there are pros and cons of any investment. There's no investment that is without risk. In this particular situation, the upside or the pro of the bond is the high interest rates, or the relatively high interest rates, I should say, because as the minister indicated, you have 4.5% on the 5-year, you have 5.75% on the 12-year, and you have 6.6% on the 20-year. Now, the reason for those interest rates, and people would find them very attractive, but in the scheme of things in the corporate world, they compare very well with what exists right now, because on a government bond, a true government bond, a bond with a government guarantee per se, because we have to be very clear that this bond doesn't carry with it a government guarantee. It is backed by the assets of the fund. And on a government guaranteed bond, which is known as a gilt-edged security, which means that the government has to pay you at the end of the day. And if the government can't pay you, it means that the economy would have failed. So that essentially those rates would be like about 3.5% on a government bond, 4.75% on a 12-year bond, and 5.6% on a 20-year bond. So what the government has done is upped that interest rate by 1%. As a matter of fact, they have made it even more attractive to the investor who is paying taxes, particularly the corporate investor, because when these bonds, as the minister I think indicated, are tax-free bonds. So when you gross up the return to the corporate investor or the institutional investor, it really works out to be about maybe 1 or 2% higher than what we are seeing on paper, and this is going to make it even more attractive for the investor. And that's the pro side of it. On the con side of it, one has to be concerned about the different risks associated with any investment. As I indicated, you have the interest rate risk, which could affect the value of your bond in terms of if interest rates continue to rise, because the central bank would have carried up interest rates by I think it's 0.25% or 25 basis points. But that is signaling a trend in terms of where the interest rates are going. If the interest rates continue to trend upwards, then that could have an impact on your bond in terms of the value of the bond, because there's an inverse relationship between bond prices and interest rates. So as interest rates rise, bond prices fall. So that is one risk that people need to be concerned about. The other risk is the question of liquidity risk. That is your ability to convert your bond into cash at short notice. So if you need to get out of your investment, and that's an area that people don't pay a lot of attention to, it's easy to get into an investment, But to exit the investment, you need to pay attention. How do I exit my investment in the event that I want to do so for whatever reason? If I want to pay for my down payment on a mortgage, if I need to pay for some medical emergency, there are various reasons why people want to exit their investment. And in this case, those bonds are tradable. I think the minister would have mentioned that there's a bond market and there's a stock market. The bond market, just like the stock market, is a thinly traded market. So it's not, you don't have that much activity on a day-to-day basis, and therefore what determines whether you can sell your bond is the particular demand on any given day. It depends on how many, what's the value of your position in terms of how much bonds you want to sell. It depends on what the rating on the bond is at the particular point in time, because each bond has a rating. At this point in time, this is a AA rated bond. That isn't cast in concrete. That could change over time depending on what the economic circumstances are in the country. So that is another risk. There's the other question of credit risk and or what's known as default risk, which has to do with the ability of the issue of the bond to meet the interest payments on the bond, which are known as coupon. I'm giving your listeners a little bit of education while we're doing this. So you call it a coupon. The interest is called a coupon, and the term of the bond is called the tenor of the bond, and therefore, what one has to be concerned about where default risk or credit risk is concerned is the ability of the issuer, which in this case would be the NIF, to meet the interest payments over the life of the bond, which would be either the 5 years, the 12 years, and the 20 years. And at the end of the day, at the maturity of the bond, to ensure that the issuer can meet the payment, so you get back your principal sum that you invested. So, and that will also depend on some of the factors that I indicated, what the prevailing economic circumstances at the time, the ability of the fund to generate the cash flows that will pay that. The minister indicated is a sort of a 2-to-1 ratio in terms of the assets of the fund and what the liability of the fund in terms of the $4 billion. That gives you more or less adequate cover in the environment. That is a reasonable cover, 2-to-1, and therefore that helps to support or I don't need to guarantee, help support the payments over the life of the fund. So the underlying assets, which are strong, I heard the minister say that, I'm agreeing with him, they are strong, and unless those assets decline significantly over the life of the bond, so we're talking about Republic Bank, which is a solid bank and so on, it is very unlikely that these things would happen. But at the end of the day, one needs to bear it. This is a risk that one needs to bear in mind. There's one other slight point I want to make on that. There's a bit of a concentration risk that people need to concern about, which has to do with the assets in the fund that are backing the bond. And based on my research, 55% of the assets of the fund are comprised of Republic Bank shares, and another 26% is comprised of the Trinidad Generation Unlimited shares. So in total, you have about 3/4 of the fund's assets in two companies, which is not the ideal situation. But as I said, the mitigating factor to that is both companies are very strong companies. And the other thing people need to take into consideration is that the income or the earnings of the fund comes from those two companies. 88 to 89% of the income comes from those two companies. So you have to so what people have to be concerned about is making sure that they keep their eyes, they monitor what's going on with those companies. As I said, they are strong. I'm not saying there's anything wrong with those companies. At this point in time, they are strong. So therefore, there's nothing to worry at this point in time about. But nonetheless, people need to be monitoring what is going on, keeping their eyes on the ball, as they say. But so at the end of the day, from an investor's perspective, one has to be concerned in terms of, is this the right investment for you? And I'm not here to give anybody any investment advice. I'm not here to criticize the bond. I'm not here to promote the bond. I'm just here to share my understanding from my vast experience of what goes on with these things. And what an investor has to take into consideration is the question of their risk appetite in terms of, are they an aggressive investor? Are they the risk tolerance in terms of, are they moderate and that sort of thing. In this case, this is really for the moderate to the low. It's not an aggressive investor business.
I think the minister did indicate that he's going to heighten the marketing.
Yes.
And one of the things we suggested is community outreach to.
Yes, that's a very good idea.
He said it was a good idea.
So you educate the
because
public,
the interest is there.
The interest, absolutely. And I was just going to make the point. So the question of what's your risk appetite? This is a relatively conservative investment. It's not it's not for the aggressive, necessarily for the aggressive investor. Then there's a question of what is your time horizon, your investment time horizon. In other words, do you want money for the short run, the medium, or the long term? So they are different tenors, as I said, 5 years, 12 years, and 20 years. So you will have to determine which one of those tenors are suitable to you. And then the last thing you would be the question of your liquidity needs. In other words, are you taking money from a relatively liquid investment like your savings account or a fixed deposit, a 1-year fixed deposit, to put it into a 5-year investment or a 12-year investment, and you need that money short term, so you think you can get in and get out very easily. You need to think very carefully if that is your objective, to buy the bond today and sell it in a year's time, hoping that there will be sufficient demand on the market. So those are the 3 areas I would suggest that people pay attention to, and I suggest that they consult a trusted and experienced legal advisor and or their stockbroker.
But I guess that is where the marketing would come in, and
Yes.
I guess they would do some more work, the investors that is, in terms of getting more education. But in terms of CLICO itself, what would you like to leave with our listeners? Where CLICO stands now?
Well, where CLICO is now is, I understand the accounts are supposed to be out relatively shortly. My understanding is that the CLICO is in the black, is now in the black, so it means that the company is solvent, it is operating as a going concern. It means that the circumstances that arose when it was put under the jurisdiction of the central bank via Section 44D of the Central Bank Act no longer exist, and therefore there will be a point at which CLICO will now be able to go off from under the jurisdiction of the central bank and operate as a normal company. Now, but all of this is predicated on the basis that the government gets back all of its money. And from what I understand, they have gotten back, I would say, probably about 90% or more of the money that they would have put out as a result of the bailout. But I will keep you all updated. I'm going to continue to monitor the situation very closely. And as progress is made, I'm sure you will have me back to update you.
Peter Permell, head of CLICO Policyholders Group, thank you so much for taking time to share with us on the Business Corner this afternoon.
You're most welcome anytime.